Welcome to the Economy Magazine. I'm Binyamin, Tjong-Alvares with a top report from the global economy. On today's magazine, Gulf states use oil price drop to justify spending cuts. And Putin gives annual speech on policies for 2015, while oil and sanctions weigh down the Russian economy. First, the headlines. Currencies globally are weaker against the greenback, intensifying declines in commodities, including food, metals, and especially oil. The euro on Wednesday fell to a two-year low of 1.23 to the dollar, and the yen dropped to its lowest point in 7 years. As most commodities are priced in dollars, consumers and companies outside the U.S. see their buying power shrink while their currencies weaken. U.S. stocks also rose on Wednesday, with both the Dow and S&P 500 ending at records as positive services sector data boosted cyclical stocks. The European Central Bank kept interest rates unchanged at record lows on Thursday as investors waited for signs of stimulus that might be on the way. The 24-member Governing Council left the main refinancing rate at 0.05% at its meeting in Frankfurt. European stocks dropped following the announcement, leaving a near 7-year high, as ECB President Mario Draghi said he would assess monetary policy next year. The Bank of England also held its benchmark interest rate at a record low, prompted by feeble wage growth, low inflation, and stagnation in the Eurozone. South Korea's parliament approved an 80% hike in cigarette prices to cut consumption in a nation with one of the world's highest male smoking rates. The 2015 budget endorsed a government proposal to raise the average price of a packet of cigarettes from $2.24 to $4 starting January 1st. Around 44% of adult South Korean men are smokers, the highest rate among OECD countries. The health ministry said it hopes the price rise will help cut that rate to 35% by the end of 2016.
So I think I will quit smoking once the cigarette prices go up by 2001. A lot of my colleagues say they have to quit smoking, and I think it's outrageous to increase the price.
As oil market analysts globally debate whether oil will fall to $50, in North Dakota, the prices are already there. Crude from the wellhead at the Bakken Shale region in North Dakota fell to $49.69 a barrel last week, down 47% from this year's peak in June. Discounted prices at the wellhead have been exacerbated by a 39% drop in Brent